Hey guys, what's going on? It's Ethan Adams with RE/MAX Properties East. We're back at it again, doing a little motivation on this Tuesday. Gonna go over just some things that a lot of homeowners don't think about when selling different investments. And one of the things that I think is a really big misconception a lot is going to be the capital gains aspects of things. Because a lot of times when sellers get these checks from selling their rental property, selling investments, even selling their primary residence, they don't take in consideration what capital gains is. Capital gains is the sale of one of your capital assets, which is going to be real property, rental property, investments such as a strip center or even vacant land that you may lease out. Those are all those capital assets that you will have those gains on. So when it comes to gains, there are going to be short-term gains and then long-term gains. Short-term gains is going to be about 35%. Because you hold it shorter. The longer you hold it, the less taxes you pay. So long-term gains is going to be 25%. And this is pretty big numbers when you think about it when you're leaving with $100,000 checks or six-figure checks, we'll say. So that's something you really got to consider when you're able to defer it with these 1031 tax exchange. That's going to be huge on that fact where you can actually roll it into an investment that you say is going to be more enjoyable for you. Maybe you're in the strip center side of things and you're like, nah, let's go to single family. Well, you can roll that money in and defer those taxes and still have that cash flow on a monthly basis. You'll pay taxes on the end of that with your income, but that's just something to consider. There are some stipulations you have to have on timeframes. What they've done is they've set a 45-day limit and a 180-day limit. So you need to identify your properties truthfully before you sell that asset that you're gonna do a 1031 on. After that, when you identify it, you will have 45 days still to identify more properties if things weren't to work out with, say, those 1 to 2 properties. But you have 180 days to actually close those deals. So you can actually put your contract on it, say if it was a strip center and you have like a 90-day due diligence, you still are in that time frame to still defer those taxes. So that's a positive as well. When you're selling your primary residence, the government, since it is your primary residence, they do cut you a break. So single people can actually defer up to $250,000 of taxes, and then your married couples will have $500,000. So guys, just take those into consideration. Hopefully you found this helpful. I am not a tax accountant. So definitely reference back to your CPA on any of these questions. But when you're thinking about selling real estate, thinking about selling investments, be sure to ask these questions to your real estate agent. So guys, Ethan Adams, RE/MAX Properties East. See ya.